Hey everyone. Happy Saturday. We're here reporting live from Penn Station, 34th Street. We are at the brand new Penn 2 project. And we're going to be taking a little bit of a walk around. We'll get started here in a moment. Now, for those of you who don't know, the Penn 2 project was put on by Vornado. You have a brand new entrance to the Long Island Railroad. You also have a new entrance to Madison Square Garden as well. And they've taken down the old Pennsylvania Hotel. Peter, what's going on? Thanks for joining us. It's another cold night in New York, but not as cold as the previous two nights, I should say. The mighty bull, Michelle, welcome. Now, the Major League Soccer signed about 125,000 square feet of office space here. Pup, what's going on? Mighty Bull. Now, on Saturdays, we really don't talk about the financial markets, but I think one thing that is important to mention, it seems as if we're getting very, very close to making a deal to ending the war between Russia and Ukraine. Now, obviously, Zelensky and the like, and really all of Europe is kind of going back and forth. But I think we're going to get something sooner rather than later, which is great news. And I think financial markets will react quite positively to that. So more to come on that. There was a good article in the Journal today about it. Obviously, the U.S. came with a massive ask, right? About 50% of Ukraine's mineral rights, rare earths and the like. Probably you're not going to get that, but in the start of a negotiation, you ask for as much as possible, then they'll probably meet somewhere in the middle. I'd assume that the deal or the agreement would end with some sort of a security guarantee by, the United States or another NATO country, but we'll see. Now, the article also stated that in Ukraine, it has some of the largest lithium deposits, uranium and aluminum, and totaling up all of the precious metals and rare earths in Ukraine, the US dollar value is roughly $2 trillion, which is pretty wild, which kind of, leads me to believe, if you kind of use the follow the money analogy, that's probably what this war is all about anyway, right? Control of those resources. So hopefully the death and destruction stops sooner rather than later. The good news is I think it's going to stop sooner rather than later. Anyway, we'll probably talk a little bit more about that on Monday because there's some specific interesting action in the commodities market that can probably lead us to believe we're going to get a deal. Anyway, I see Top Cat is here. Alan, good to see everybody. We're right here on West 32nd Street and 7th, looking northbound. Diana, what's going on? But you still have the old entrance to New Jersey Transit. So hopefully this will be getting a revamp. This is pretty much the only corner that hasn't gotten a revamp, is this one little entrance here for the New Jersey Transit at Penn Station. This is still the original entrance, which is kind of weird. Anyway, Scott P., what's going on? Good to see you. We'll go ahead and make this left on 31st Street and 7th. Now, if we were to continue to walk down 7th Avenue, this would bring us into the SUNY, the State University of New York, FIT, or the Fashion Institute of Technology. But we'll head over, and that should bring us into Koreatown. Bobby B says I'll be back into the city much more once they update the New Jersey Transit section. You know, I took the New Jersey Transit to, what was it? Newark Airport. I think you get off at Newark Penn Station and then you take the air train there. I forget which stop I got off, but wasn't bad. Wasn't bad. That was the first time I've taken the New Jersey Transit in, I mean, my God, years and years. Patrice 2020, good to see you. It is kind of a slow-moving night here in Manhattan, even though it is a Saturday night. This week has just been brutally cold, which has been pushing a lot of people inside. But the good news is next week, particularly on Tuesday, it's going to get up to 55 degrees. Hopefully this is a sign of an early spring. We'll see. Who knows? Definitely no guarantees, that is for sure. Bobby B says, yeah, Newark Penn to the airport isn't that bad. And I found, I really never fly out of Newark Airport, but I might consider doing so more often, because I find it that the flights are a little bit less expensive if you fly out of Newark as opposed to if you fly out of JFK, at least internationally. So the first time I flew to Korea, I flew to Korea from JFK on Air Korea, which was a pretty expensive flight. Actually, it was a very expensive flight. But the second time, I flew a new airline. It was called Air Premia. So if anybody's flying internationally, I think it goes to Korea and a few other Asian countries. Might I suggest checking out that airline? I think I've mentioned this before. It's relatively new. I want to say the airline, I mean, it's got to be less than 10 years old. You could obviously Google this and look this up for yourself, but check it out, Air Premia. I bought 2 round-trip tickets from Newark International to Incheon, and I think it was just a tad under $2,500 for 2 round-trip tickets, which is not bad at all. So it's more of like a discount airline, which I tend to stay away from, but this one was brand new. Everything was really brand new. It was awesome. Yeah, so Air Premia is the airline. Now we did, speaking of Asia, we were talking about some merger news, which we'll probably pick up that conversation on Monday. But obviously you had the Honda and Nissan deal kind of falling through. And the rumor has it is that Nissan is looking to, kind of persuade Elon Musk and Tesla to make some sort of an offer for the company. Probably unlikely. We've discussed many of the reasons why. Now, there are some analysts that are putting out some research saying that Tesla would benefit from the acquisition of Nissan due to the manufacturing facilities and plants that are already existing in place. However, a Tesla manufacturing plant is much more advanced and customized, so I don't really see that there would be many synergies there. So who knows, maybe there's interest from Tesla in the team to go after Nissan. We'll see what happens. Now, the Japanese government has kind of gotten involved here because Foxconn, which is, obviously a major Chinese company, a major Apple supplier, they wanted to make an offer for the company, and they deemed that a national security threat, which maybe it's not, maybe it is. So we'll see what's going to happen with that. The auto business is it's a terrible business, right? It's kind of almost worse than airlines, I would say. There hasn't been a U.S. automaker besides Tesla that hasn't gone bankrupt. And the airline business is a very, very tough business as well. So we'll see what happens. But that is a deal that I'm watching very, very closely. And we'll see if by the end of the deal making, maybe Foxconn ends up with a piece of the pie. But more interested to see if Tesla makes some sort of an offer, or maybe there's a acquisition to be had there. Anyway, Professor Dario is here. What's going on? Doc 7. John, welcome. Ibrahim Azam. What's going on? Matthew M. Esmeralda. Peter Noah is here. What's going on, Noah? Hopefully you're doing well and enjoying the recent volatility in the markets. Yeah, Alan says Discover Capital One merger, and I think that's going to get the green light, particularly, this administration, the Trump administration, very pro-business. Now, what I do have to say, though, to be fair, January, I think, was the worst month for M&A in, I think, over 10 years, which kind of makes sense, right? The Trump administration coming in here, lots of uncertainty, a lot of changes. I think a lot of businesses are kind of getting ready and preparing to see what's going to happen with a lot of the tariffs. So we'll see what happens with that. But over the long term of the 4 years of the presidency, I think you're going to see a boom in M&A and deal-making activity. Maybe reminiscent of the 80s, right? Monster deal-making activity happened all throughout the 80s. So who knows? Maybe a lot of these investment banks have a little bit more runway. So assuming that we get a correction in bank stocks, right? Goldman Sachs, JP Morgan Chase, especially the boutique banks, right? The boutique investment banks. Let's say if we get, a 15 to 20%, that would be a hefty correction in those individual names. I think it'd be a pretty good buy, because the back end of that, going into the late first half of the Trump presidency, I think is going to be a boom for deal making, and perhaps you'll have a little bit of a lower interest rate environment in the second half of the Trump presidency, which would spark deal making and things like that. So we'll see. Also, to kind of pick up on some extra earnings power potentially from these investment banks would be a pickup in IPO activity. Still, the IPO markets are pretty much shut off, but I think over the next 2 years, you're going to see pure play AI IPOs start to hit the market. If you think about the frothiness in terms of IPOs and SPACs in 2021, that's what I believe we are going to see some point within the Trump presidency in terms of AI-themed IPOs, which is going to cause a speculative mania, which would then end at least the cycle, right? Kind of how 2021 was the top or the parabolic blow-off of that cycle. I do not think we have reached the top of this cycle until you see a major spike in new issues, particularly a spike in new issues of poor quality too. So we'll see. But lots to talk about. We'll pick that up on Monday. Triple G, what's going on? It says, hey, Tom and chat, M&A activity seems to be ramping up in 2025. Yeah, I think I agree. We also have NVIDIA to cap off the earnings season next week, right? Noah says, I think the next 2 quarters of earnings will be below expectations and economic data will continue to decline. Higher interest rates and sticky inflation, I believe a correction is due. Yeah, I mean, it definitely seems so. I'm not sure if you saw that Bloomberg article that came out with Steve Cohen, obviously major hedge fund manager, the third point. He kind of echoes the same. So perhaps the first half of the Trump presidency, right, brings about, a lot of volatility, a lot of uncertainty with the tariffs, also ending this war in Ukraine we kind of talked about. Over the weekend, if anybody was reading the Financial Times or the Wall Street Journal, lots of information and data is coming out right now about the negotiations that are going on to end this war in Eastern Europe. There's actually a lot of politicians in New York City right now working on the resolution, hopefully, fingers crossed, to this war. And, even more obviously, the Trump administration is trying to make a big play for Ukraine's natural resources, right, as a quote-unquote payback for the United States backing them and helping them fight the Russians. Again, I won't give my personal political opinions on that, but a deal that is on the way is a huge catalyst for economic activity, because that's going to open up the Russian markets too. A lot of people, forget when Russia invaded Ukraine, which I actually falsely predicted. I thought that Russia was not going to invade Ukraine. But when they did, you had a ton of companies, not only domestically here in the United States, but across the world, pull out of Russia, right? Cease doing business in mainland Russia. So, assuming that this war gets resolved, which I think it will, probably this quarter, you're going to have a huge pickup in business activity in Russia. So if you look at the major equity indice in Russia, it's actually been doing pretty good over the last 2 months, which leads me to believe that is a leading indicator in and of itself that this war is going to come to a swift conclusion. Again, speaking of Europe, look at the German DAX, right? You hear all of the, if you've read any article or tuned into any news organization recently about, covering the war in Eastern Europe, the biggest fear is that Russia is going to make a big push past Ukraine, Poland, and, try to take over Europe. If that were so, that would be reflected, at least in my opinion, in the stock price or in many of the major equity indices in European countries. The exact opposite has happened. You've actually had quite a nice bid in those. So this weekend, if you have time, I would just kind of go line item by line item. And, price is usually leading by about 6 months. So perhaps, in short, markets are pricing in a conclusion to this war, which would be great. John is here from Brazil. Good to see you, John. KML says if Trump can pull off a real peace deal between Russia and Ukraine, it will be worthy of a Nobel Peace Prize. Well, one thing you're seeing now, and just from kind of the articles I'm reading, you have Europe and pretty much NATO countries taking one major side in the resolution, right, or the proposed resolution. And then you have the United States kind of taking the other side and trying to put forth their own deal and almost kind of cozying up a little bit, maybe that's the wrong word, but at least showing some sympathy to the Russians. Now, perhaps that's a very good idea in terms of a negotiating tactic, right? Because if you go into the negotiating room and it's just a big dog pile on Putin, he's not going to be that motivated to make a deal, right? So it's kind of a strategic play, which is one thing I believe that the media is getting wrong, right? They like to kind of dump on the Trump administration saying, oh my gosh, he's cozying up to a dictator, this is terrible. But if I'm negotiating with somebody, right? Like if I'm trying to sell somebody, software or sell somebody an apartment, and I'm talking trash to them in the media, I'm saying they're a dictator, they're evil, they're terrible. Well, they're probably not going to be too swift to make a deal with me, right? But if I kind of play the fence, which I think what the Trump administration is doing, kind of softening the room, saying, look, there's blame to share. I think Trump actually called Zelensky a dictator, one-off. That's kind of softening up Russia, right? To come together to make a deal. And I think that's how it's going to get done. So I think this is going to get resolved much sooner than people expect. Obviously, the big ask from the Trump administration, where they pretty much almost like strong-armed Zelensky into signing the thing at the table before he could even read it, was to, give up, I think, 50% of their mineral rights to the United States. That's not going to happen, right? But you will probably get something, and I think that would probably be advantageous for Ukraine to take that, because if we don't get it, well, guess what's going to happen? The land that Russia pushed through so far, they're probably just going to get to keep that, and they will control those minerals. So again, this is all speculation. We usually don't talk about things like this, but at the conclusion of it, this is going to have some pretty significant economic impacts. And my bet is that they're going to be pretty positive. So we'll see. Reggie 44, what's going on? Larry Adams says, I just read that Ukraine is at the table now. Madison 32, cheers. Lance, Tom, what happened with your apartment tours? You used to show some awesome properties. We have a few more coming down the pike. We're actually about to list some very, very interesting properties here pretty soon. And now that I'm hopefully done with international travel, at least for now, we'll probably be stateside for the foreseeable future, and we're going to have a lot more of those properties come out. Noah says so many geopolitical dynamics at play, for sure. Now, another thing is the price of crude oil, right? If this war was really going to drag on and get progressively worse, I think you'd see $90 a barrel crude right now, which we obviously don't see. So everything we're seeing in terms of European equities, we talked about the German DAX is ripping, right, despite all the craziness going on in Europe. You have Russian equities performing pretty well. And as part of the deal, again, not to repeat myself, but if I had to bet, you would see businesses upon signing of this peace agreement, you would see businesses turn the switch on and continue to do business in Russia, which would be good. Now, did anybody read the Berkshire Hathaway shareholder letter that came out just recently? It was pretty interesting. If you haven't, go ahead and check it out. Berkshire's sitting on a really just unbelievably behemoth cash pile. But one of the things that resonated with me the most about the letter is Warren Buffett kept reiterating that, yeah, we understand that our cash pile is ginormous right now, but we prefer and will always prefer a first choice of deploying investor capital into U.S. equities, predominantly U.S. equities. Now, that was number one. Number two is the following. If you remember about maybe 8 months ago, I think it's like 6 to 8 months ago now, when we had that big unwinding of the yen carry trade in Japan, everybody was freaking out on that night, saying, Japan is going to zero, the economy is going to crash, the Nikkei is going to continue to go lower, this is the end for Japan. And I came out kind of a little bit contrarian and said the exact opposite. And I said, this is actually probably a once-in-a-lifetime buying opportunity for Japanese equities. And I wouldn't be surprised if we see the major equity indices in Japan do a complete 180 and make a run for new all-time record highs. Well, I was kind of half right. We're not at all-time record highs right now, but we're pretty close. We're like a stone's throw away from a new all-time record high on the Nikkei index. And if you read the Berkshire Hathaway shareholder letter, they said, and I'm kind of paraphrasing here, that they plan on deploying more capital into Japan and select Japanese equities. And I agree. Frankly put, I agree. I think Japan is poised to do very well, particularly with this administration. So we'll see what happens. We're going to head up towards 42nd Street. Right now, this is 34th and 5th. One other piece of news that I really haven't seen any follow-up on that was kind of spooking the markets as well. Apparently, they discovered a new coronavirus that is allegedly more deadly than the first pandemic, and this coronavirus could spark a second pandemic, which really kind of spooked the markets and acted as a negative catalyst. I was trying to look around for more data and more articles today. I couldn't really find anything, so I'm wondering if anybody else saw anything of substance. Again, not really my wheelhouse, but Larry Adams says, I saw your post about it. Yeah, there was like one article that came from the China Daily, so right out of China. So that's kind of what freaked everybody out. I had a few friends who are pretty substantial money managers kind of show concern about it, but at this point I'm not too concerned, but what do I know? Mike G says haven't heard anything about it. Well, I guess that's good news. Michelle Henry, good to see you. Jack Jackson, welcome. Yeah, Madison 32 says, Tom, did you see where Bill Ackman proposed to acquire 10 million new shares of real estate firm Howard Hughes? I did hear about that. Now, on Thursday, Pershing Square and Bill Ackman made an investor presentation on X. I didn't have enough time to join. I told myself I'd watch the presentation over the weekend, so maybe I'll get to it later tonight or tomorrow. But from my understanding, Ackman wants to build the modern-day Berkshire Hathaway, and he sees a lot of value in Howard Hughes because they are kind of really hammering down and focusing on select high-growth markets and kind of like building mini cities that are very, very durable within those markets. Again, I don't know too much about it. I'll have to re-listen to that X Spaces. But yeah, I heard about it. It should be pretty interesting. Red uses putting money in a gold ETF. Well, gold's been doing really well, over $2,900 an ounce. I think we'll see $3,000 gold in short order. That has been my initial target for gold for quite some time now. We've been talking about how gold, about a year ago, a little over a year ago now, has broken out of quite arguably the largest cup with handle base that I've ever seen in my career. Similar to the cup with handle base that Bitcoin broke out over, around 72,000. The initial price target, the first price target on that breakout over 72 for Bitcoin is right around 113,000. I think we got as high up as 108, maybe 109,000 for Bitcoin. So yeah, gold, the physical gold and the digital gold is doing quite well. That is for sure. In the crypto world, though, there was a massive hack, the largest hack in really recent history, and I think ever, for the crypto world. And I believe the hacker was an organized crime ring, organized cybercrime ring out of North Korea. But now that you guys mentioned gold and Bitcoin, obviously, in hindsight, everything kind of makes sense, right? I mean, if you went back in time, let's say you went back, 5 years, and then somebody gave you a phone call from the future and didn't tell you anything about price action, the only thing that they were talking to you about on the phone is what was going on, right? They said, we had a really, really messy election, right? A really brutal election between Trump and Kamala Harris, right? Very, nasty election. Then we had a raging war in Eastern Europe. So much uncertainty, massive shakeup in the U.S. government with Doge. Elon pushing. It's really Elon pulling the strings. We all know that. Mass firings. You'd probably say, yeah, gold is probably ripping right now. Also, a little bit of a resurgence in inflation. The last CPI print that we got was about 3%, which was driven by this massive rally in the price of eggs due to the bird flu. But taking all of that into account, you're like, yeah, I could see why gold is ripping towards $3,000 an ounce. Oh, plus, record levels of deficits in our national debt. So it definitely makes sense, right? Why a scarce safe haven asset, and by the way, an unconfiscatable asset would be ripping. I've always said my number one value proposition for Bitcoin, going back to when I first started buying Bitcoin in 2014, 2015, is that it's the only unconfiscatable asset in the world. What happened when the war in Eastern Europe broke out? Sanctions galore. A lot of these Russian oligarchs had their wealth confiscated, and you've had a lot of other politicians and political leaders have their wealth confiscated around the world, right? Bitcoin is the only quote-unquote unconfiscatable asset, assuming you hold the physical coin in your wallet, aka have your own private keys. An ETF is a different story. Go for Hockeys is here. What's going on? Happy Saturday. Hopefully you're doing well. Triple G says the whole thing, the whole egg thing is crazy. I don't really notice it, but maybe that's just because I don't go to the store and physically buy eggs. But yeah, apparently it's like $10 for a dozen eggs right now. Something crazy. Peters, there's a new coronavirus named HKU5. CoV2 has been discovered in China, raising concerns about its potential to cause a pandemic. Yeah, that really roiled markets on Friday, but the transmission risk is low. Well, that's good. Mitch says, what if there's no gold in Fort Knox? I think the whole Fort Knox thing, like the auditing Fort Knox, I mean, I think that's kind of like a non-issue. It's more along the lines that I think of as like outrage bait. And a lot of people are freaking out that, a lot of countries in Europe are sending their gold to New York and vice versa. There's just a little bit of an arbitrage opportunity there. Now, Dan Tapiero, who we talk about quite often, he's a friend and one of the greatest investors that I know. He got his start working under Stan Druckenmiller. And probably one of the most talented global macro investors I know. He's then spun off, founded his own firm, 10T Holdings, where he invests solely into companies supporting the cryptocurrency and digital asset ecosystem, but buys the equity, right? And there's we could spend 2 hours on exactly why, mainly due to the regulations. You can't actually put clients in these select cryptos, but you could just buy the equity in the companies, right? So perhaps like a venture investing, if you will. But he was invited to the New York Stock Exchange recently to ring the bell as they potentially take another major crypto exchange to the public markets. And the whole kind of theory, or the reason why he named his firm 10T, was that he believed that this space was going to reach a $10 trillion market cap, right? So all the crypto assets, he's like, that's where my target is. And this was back, this was like 2013, 2014, when he was talking about this. He now thinks that this whole market and this whole space is going to be a $50 trillion asset, which I agree. In my lifetime, when I'm probably 65 years old, this thing's probably going to be, maybe you're looking at 100 trillion. So that is an asymmetric bet, right? You don't really need to get that aggressive and get like super, super heavy risk on to potentially, 10x through your account over 60 years, or maybe even a lot more than that, right? Another thing I like to mention is a lot of these major institutions now have products that they can sell, right? An ETF is just a product. So when you see Larry Fink coming out in the market and throwing out these ridiculous, price predictions on Bitcoin, it doesn't matter if he believes what he's saying or not. He may not, right? He may think that Bitcoin is nonsense, and it's highly probable that he might think Bitcoin is nonsense because I remember back in 2013, 2014, 2015, that was his stance, very similar to Jamie Dimon. But what's different now is his institution has a product that he could sell to his clients and customers, right? The IBIT, BlackRock Bitcoin ETF. And the goal in the ETF business, which is a very tough business, by the way, it's a very, very tough business to be profitable in running an ETF. You have to essentially accumulate AUM, or assets under management. So if you don't think that the CEO of BlackRock, every time he comes on CNBC or Bloomberg or a major financial network, isn't going to be, pitching his products, you're crazy, right? So again, it's the follow the money principle. Everybody's going to start getting involved in this. What I've said many, many years ago, financial advisors will start advising that their clients get at least 2 to 3% exposure to the digital asset space. And that probably by the end of my lifetime will be a 20% allocation, right? When I'm 65 years old, if you have a financial advisor or a wealth management office, they will be recommending a 20% allocation to the digital asset, quote unquote, Bitcoin ecosystem. Because I've seen this evolution, right? I've seen it in real time. I remember when Tom Lee would come on CNBC in 2014 saying, we recommend our clients get a 1% allocation. And then everybody else was like, you're crazy, this stuff is nonsense. We would never recommend an allocation. And now across the board, by and large, financial advisors are recommending and advising their clients on at least a 2% allocation. That's going to go to 5%, broad-based. And when you have the regulations in place to allow major financial institutions, right? So a wealth management office at JP Morgan Chase, a wealth management office at Goldman, a wealth management office at UBS and the like, once they get products on their paper that they could sell, quote unquote, they're going to be selling that to their clients. So that is an asymmetric bet. There a lot of asymmetry there. You don't have to put a lot of risk in this to potentially get a huge return. So additionally, let me just check the time because I do have to catch a train. Another thing that I like to say is also follow the young talent, right? The future is our young people, right? The future is our young people that are coming out of colleges, universities, and institutions right now. And pay close attention and watch where the biggest brains, not only in the United States but around the world, where are they choosing to work, where are they choosing to go? By and large, right now, it is AI, tech, fintech, and crypto. That is where the talent and the intellectual capacity is going. So there, by and large, you don't want to bet against that, right? So the future is digital. Skate to where the puck is going. Pay close attention to where graduates of the top universities and institutions, where do they want to work? Where do they want to go? Right? They're going to work at these big jobs at Coinbase. They're going to work at Gemini. They're going to, work at these venture funds that are backing these crypto startups. And they're launching their own startups. So that is where the money is flowing. Follow the young talent, follow the high-paying jobs, and that's where I think a lot of the alpha is going to be created down the line. Hey, what's up, Trade Brigade? Happy Saturday. Hopefully you're doing well. Definitely had quite the eventful close on Saturday, or on Friday, I should say. And next week we're going to have a pretty big finale to earnings season with NVIDIA. Whew. All right, we're back in Grand Central Station. But yeah, just going to be a shorter stream tonight, just because I got to be up early. But I wanted to kind of come on and just rapid fire a lot of those, those main topics that are kind of on the mind. I believe we already covered the just overall market sentiment, and consumer sentiment is really in the toilet. The University of Michigan consumer sentiment coming in much lower than expected. And there was an interesting Financial Times article, I think on Thursday or Friday, that came out that says the vast majority of Americans are very pessimistic on the U.S. economy right now. What's up, Dave? Good to see you. Oh, that's right, Leslie, I heard about that. The Pope is not doing well. either. But if you can, if I had to say if there was one article that I would really, really recommend reading, it was that article on the ongoing negotiations with, Russia, Ukraine, NATO, United States, kind of talking about specifically what potential deal may happen or may not happen. And the infographic that was posted, which was really, really good, I think I maybe tweeted it out on X. Apparently, all of the raw materials, rare earths, I think they mentioned aluminum, uranium, and a few others, and a lot of rare earths that go into making, EV production and the like, that is within Ukrainian territory, totals about $2 trillion. And the Russian-controlled parts of Ukraine right now just so happen to line up with a pretty hefty deposit of those precious metals, rare earths, and the like. Which leads me to believe that the deal that is going to be done is probably going to send some major shockwaves to the commodities markets. And I think the United States is going to get a big controlling piece in those specific mineral resources, precious metals. Now, the media has been kind of spinning this saying, the United States is kind of coming in here, strong-arming Ukraine, and is going to fleece the country, right? Steal all its mineral rights. But if you think about it, right, go ahead and look at that infographic. The Russian-controlled territory right now has a lot of those precious metal, rare earth deposits in it. So by the United States, this is just my thought process here, by the United States really trying to push their influence in this deal to get 50% of the mineral rights, that's kind of going to block out Russia. So perhaps that's really the only solution to kind of push the Russians back, because they're obviously not going to agree if France and Macron says we want 50%. It's just not going to happen. We've been bankrolling this war. So watch the commodities market next week. I think Ukraine is going to get a favorable deal from this, regardless of what you see in the media. I think the negotiating tactics here are very good. I think Ukraine comes out on top, and I think the West predominantly comes out on top. And this is the last thing I'll say, and then I got to run. You see right now NATO countries and all of Europe really siding with Ukraine, right? Saying Russia started the war, this and that, yada yada, Russia's the aggressor, Russia needs to give back all the territory it took. But you're seeing the Trump administration almost very awkwardly and weirdly, to use the media's term, kind of cozying up to Russia. You've seen President Trump call Zelensky a dictator during these negotiations. I think that's the Trump administration softening the room for Russia. As I've mentioned at the beginning of the broadcast, if you're selling somebody an apartment, if you're selling somebody software, and you're talking shit about your client, right, excuse my language, if you're going in there and saying, yeah, this client's, a piece of garbage, he cheats on his wife, he's terrible, and then you ask him for the business, he's not going to give you a deal. But if you're Trump and you come in there and you say, look, Zelensky, you're acting like a dictator, maybe Putin made some mistakes, but look, let's just squash this war, kind of cozy up to Russia. He's going to soften up Putin and the Russians into coercing them into being open and making a favorable deal. So that's my prediction. Again, I'm not a geopolitical expert. I think this war is going to come to a conclusion that many people are going to be surprised of. Okay, and I think Ukraine is going to come out in a much, much better position, both militarily, by the way, and in terms of their economic positioning. Because if we get the mineral rights, which I think we're going to get in Ukraine, Ukraine is going to be a main exporter to the United States and Western nations, and they're going to make a lot of money, but in a legal and ethical way. So that's kind of how I'm piecing the puzzle together. And I think that's going to send some shockwaves in commodities prices. So on Monday, we're going to talk about a few firms, particularly Tudor Investments, and a few others I have written down here, that have made some very interesting let's just say, directional bets in the commodities markets in a few of these specific commodities that, I think could act as a leading indicator here. So I do have to run. I wish everybody a wonderful weekend. And we will meet back here at 8:45. We'll do the 2-hour stream. And yeah, hopefully everybody's doing good. And it's good to see everybody again. So Scott, thank you so much. Liz, I appreciate you. Jack Jackson, Trade Brigade, good to see you again. Noah, always a pleasure. Bobby B, cheers. Leslie, Madison 32. Mohammed, Quinn, Emma, Mike G. Have a great weekend. Signing off from Grand Central Station. Take care.